Welcome to UBP TV. World growth has disappointed financial markets in the past month. Do we enter secular stagnation as promised by some economists? No, we don't. It is difficult to say that risks of stagnation are not there, but we think that on the short run, the world activity should rebound and to show more strength. Look at the US situation first. Q1 GDP was very depressed, but a large set of monthly indicators prove that growth is in a recovery process and GDP is expected in a 3% to 4% range in the second quarter. Consumption looks more solid, stronger job creations, rising confidence, less fiscal constraints, and a rebound in credit. CapEx should also rebound as the growth environment is very friendly for corporates. Low energy cost, low unit labor cost, low cost of capital, and rising orders. The firmer CapEx should drive productivity gains higher and lead to more positive revisions to EPS growth. The US growth is on better fundamentals, and the expected recovery is not only a cyclical one, but also a structural one. It should stay in place for several years. Look at the Eurozone now. Germany has driven growth in the first quarter thanks to higher consumption and CapEx. The recovery in peripherals is still modest in Q1, but it looks promising. Italy, Spain, and Portugal seem to enter in a more positive economic and political cycles. Reforms have delivered positive results, restoring external surpluses and productivity gains while confidence is improving. Thus, the outlook is positive as domestic demand should continue to progressively rebound, and we expect a still positive growth momentum in peripherals. The ECB is supporting the rebound. Of course, we expect a lot from its next June meeting, that is to say, lower rates, higher liquidity injections, and probably some announcement in favor of a sort of credit easing. In the US, the Fed is also very pragmatic. Did you notice how its communication has recently turned dovish and cautious about the future management of its key rates? The Fed is maintaining interest rates at low level, while growth is bottoming out. This is a perfect environment for the US budget, higher fiscal receipts and low cost of financing. Let us conclude with a few points. The G7 enters a recovery, a cyclical recovery. The US leads the way and its recovery looks more structural thanks to a sort of new deal for its industry and a renewed economic leadership. Central banks continue to support the rebound. Of course, it is still a low growth, low yield environment, but higher capex and productivity should underpin a sustainable economic growth trend in the G7 countries. That should fuel the rebound in the next quarters, but also next year. World growth should thus escape to any stagnation. Thank you and see you soon on UBP TV.